Regardless of whether or not you're a swing position or day trader, just like the star led the three wise men, the higher time frames are where we look to determine direction. And in today's video, here's how you can replicate everything I did to master higher time frame structure. So before we get into the video, I do have a free Telegram chat where I share weekly forecasts and trade idea, and you can also talk to me directly if you need any assistance. And I have a free course that has everything to set you up for success as far as technical analysis is concerned, and you're not going to pay to join the group. It's absolutely free, so be rest assured there is not going to be any upselling at the end of the video. The link would be in the description. With that out of the way, let's talk about market structure. So what comes to your mind when you think of the higher time frames? I'm sure you're thinking the monthly, but that is a bit of an overkill for two main reasons. First of all, the monthly time frame does not reveal so much information within its candlestick, so it's hard to read and understand the structure. Secondly, you're not patient enough to trade the monthly time frames. I mean, imagine having to wait for 3 weeks to 2 months for a setup. I mean, that's unrealistic. I'm not knocking out the fact that there are people who can actually do that, but for you and I, the average day traders who perhaps have a few $100,000 in your trading account, I mean, you wouldn't necessarily be doing that. What time frames should you use? Now, the number of time frames you actually look at doesn't actually matter, but every trader needs to fit his time frames into 3 categories. And that's to say, even if you make use of all these time frames, you need to create 3 categories to fit all these time frames into. Now, you need a higher time frame for direction, an intermediate time frame for structural changes in the direction of the higher time frame, and a lower time frame for refining entries, entry confirmation, and stop loss placement. Having said that, let's take a deep dive into the structure of the market. Now, I don't know what strategy you actually trade with, but personally, I look for structural breaks in a clear direction of my chosen higher time frame, which is usually the daily and the weekly. Then next, I wait for price to trade back into certain areas that I consider to be points of interest, after which I will switch into my intermediate time frame, and that's usually the 1 hour, 2 hour, or the 4 hour time frames to look for structural changes in the direction of the higher time frame. And then finally, I use the 5 or 15 minute time frame to get entry confirmation and stop loss placement. So let's go ahead and explain everything that I just explained. So I basically talked about having 3 categories of time frames: higher time frame, an intermediate time frame, and a smaller time frame for entry. So what I do is I start my analysis on the weekly time frame or the daily time frame. That's not to say I spend most of my time on the daily time frame. I absolutely don't do that. Basically, I look at the weekly time frame at the beginning of the week and at the end of the week, and then perhaps look at the daily time frame mostly at the beginning of the day. Most times I'm on my intermediate time frames waiting for price to trade into my points of interest. So if this is actually an uptrend, perhaps let's say we have higher highs and higher lows coming into this is a clear trend on the weekly time frame. So weekly time frame says we're going up. So impulse, retracement, impulse, a break of structure to the left here, indicating the willingness of price to continue to the upside. So what I'm actually going to do is wait for price to retrace into any of these areas. Now, I'm going to create a separate video, or alternatively, you can refer to the free course for more explanation on buyers and sellers territory. So when you have a break of structure to the left, an impulse, as long as price remains above this low that brings us to the new high, we're in the buyer's territory. And that's to say, price can decide to come back here and continue to the upside, which is most times unlikely and very unreliable, or alternatively for price to pull back deeper, because a lot of people actually buying from this level are placing their stop losses here. And then what we're looking for is for early buyers to be taken out, so there is enough liquidity to fill the movement of the market, and then our points of interest are usually in these areas. where I'm looking to buy. So if this is my higher time frame, weekly time frame, impulse, break of structure, I will be looking for a retracement into this weekly point of interest. Now, once price retraces into my point of interest, what I will go ahead and do is switch to my intermediate time frame, which is basically the 4 hour, 2 hour, or the 1 hour time frame. Now, I use all these time frames simultaneously. Okay, I use all of them simultaneously. I'm trying to see how I can move this way. Okay, then we can bump it up a little bit. I think this is fine. This would do the trick. So what you can actually see here is what looks like a single impulse swing on the weekly time frame or the daily time frame is usually multiple swings on the 4 hour time frame. Is more like you taking this, putting this under a microscope, and then this is the magnification you actually get. So this is your first impulse, your retracement, first impulse, your retracement, and then that's the break of structure you're actually looking for. So this would actually be your weekly point of interest. Okay, I'm gonna go ahead and delineate that. This is your weekly POI, weekly / daily point of interest. Okay, sorry about that. So now what I will go ahead and do is, once price trades into my weekly POI, what you're going to start to see on your intermediate time frame is usually, give me a minute to get into drawing mode, stay in drawing mode. What you're going to see is price creating a series of lower highs and lower lows, trading into this area. Now, what you're actually waiting for on the week inside to happen inside the weekly weekly point of interest is an internal structural change. So, in as much as the structure is bullish, when we're having this retracement, price is temporarily bearish. Okay, and we will only buy when and only if we see price pull back. And then instead of actually creating a new low, we want to see price fail to create a new low and then create an impulse leg that breaks the previous high. Okay, so that is basically what you want to go ahead and see. That is basically the internal structural change you're actually looking to see inside your weekly time frame on your intermediate time frame. So I'm going to do a quick recap before we jump into the lower time frames. You're basically looking for clear breaks of structures in a clear direction on the weekly time frame, and this is actually what you get. So once you're able to delineate your weekly point of interest, you're going to switch into your intermediate time frame to wait for price to trade into that weekly point of interest, and you want to see an evidence and confirmation, which is an internal break of structure. Now, the reason we're waiting for this break of structure is simply the lower time frames or the intermediate time frames are simply telling you, I have now submitted to the higher time frames to take control. That means there is a synchronization between the lower time frames and the higher time frames. Okay, that is basically why you want to wait for these internal breaks of structure to actually happen. So once you get your internal break of structure, you can decide to take a risk entry and simply just a risk entry, placing your stop loss below this low. This will probably be your entry, and then price will retrace back into any other blocks and imbalances and continue to the upside. Okay, I'm not going to talk too much about lower time frame entries, because alternatively what you can actually do is, once you have this internal break of structure and you now have your higher time frame points of interest, you can go down to the lower time frames to refine these entries to give you smaller stop loss placements and basically bigger target. So I wouldn't spend too much time talking about these smaller time frame entries. I think I will create a separate video that will probably be available on this side of the screen when it's ready, or alternatively you can refer to the free course for these topics. I talk about them a lot. If you've made it this far in the video, I'm sure you've taken a ton of value out. Let me know in the comments section if you've had any epiphany as far as market structure is concerned. The link to the free Telegram chat is in the description, and subscribe if you haven't, and I will see you in the next video. Peace out, guys.